Hi students, welcome to Manifested online classes. We are still in topic number 3. In this session, I want us we look on illustration question regarding preparation of a financial statement of a professional firm. In our previous class, we discussed on what is a professional firm, the financial statement which are prepared by the professional firm. And therefore, in this particular class here, I want us we look on an illustration question regarding the preparation of the same. Now, from the past papers, we have a number of questions. Actually, we have 3 questions. We have the question for May 2015, which is question number 2C. We also have another question for November 2018, question 5B, and another question for August 2022, question 4B. If you compare this particular question, you'll be able to see like all of them are the same, maybe with a very slight difference. And therefore, for illustration purpose, I want us to do this particular question here for August 2022, question number 4B. And then I'll give these 2 questions here for May 2015, November 2018. I'll give those particular questions as what? As an assignment. So make sure you attempt those particular questions, because for this particular unit here, you need to do a lot of what? Exercise. Equally, if you don't have any challenge in terms of attempting those particular questions there, I usually encourage my students to acquire this revision partner by Manifested Publishers, which will help you in terms of doing your what? Your revision. So therefore, let's look on this particular question here, question 4B of August 2022. That is a question I want us to do for illustration purpose. August 2022, question 4B. So let's first of all we go through the question, we see what we are told. And the question reads, S and M are advocates operating under the name SM Advocates. The firm trial balance for the year which ended 30th June 2022 is as shown below. We are given a trial balance there. We have the cost charged to the client. We have the work in progress on 1st July 2021, which is now at the start of the year. We have the client for money held on their behalf. This is money held on current behalf. And then we have the creditors. We have receivables, office expenses, furniture fittings, library books. We have cash at bank, in client account and office account, postage, telephone, internet bill, printing and stationery, rent and rates, salaries to staff, drawings, disbursement on behalf of client, and then we have the capital account. Then we have some additional information. Number 1, you're told it is estimated that debts amounting to 16.5 million are uncollectible and therefore should be written off. Number 2, we are told depreciation should be provided at the rate of 20% per annum on the book value of furniture, fittings, and library books. Number 3, we are told the uncompleted work as at 30th of June 2022 were valued at shillings 70.5 million. So what are we required? Number 1, we're required to prepare the statement of profit or loss for the year which ended 30th June of 2022. And Roman 2, we are required to prepare the statement of financial position. So let's start with what is required in Roman 1 of that particular question. And Roman 1, we are required to prepare the statement of profit or loss of this professional firm. So the name of the professional firm is SM Advocates. And this is a statement of a profit or loss, and this is for the year which ended 30th of June 2022, 30th of June 2022. Remember what you have said is that this is prepared to determine the profit or loss for the year, and I've said we first of all start by taking incomes minus the expenses. The difference between the two is a profit or a loss for the year. And we need to have two columns here. We always have two columns. And what do we start with here? We start with always we start with the incomes of a professional firm. So for the incomes, I've said we start with something called the cost charged to the client. The cost charged to the client, cost charged to the client. Basically, I've said that this is the main source of income as far as these professional firms are concerned, and you're given that figure, or we're given that item as a first, that figure as a first item in the trial balance. Then to this, I've said we add the crossing work in progress. Crossing work in progress, we have said that this is the work which is not yet completed at the end of the year. If you go to the additional information number 3, we are told the uncompleted work at the end of the year was 70.5 million. So that uncompleted work when the year was coming to an end is now what referred as the crossing work in progress. And it is important to note that the figures in the trial balance are given in thousands of shillings, meaning that when taking any figure from the additional information, we have to omit the last 3 zeros. And then to this, we less the opening work in progress. Opening work in progress, this is in the trial balance, the second item, which is a figure of 110,400. And then after deducting that, we get now the net cost charged to the client. The net cost charged to who? To the client. So let's compute that particular amount there. So we have 750,000 plus 70,500 minus 110,400. So this will give us 710,100. We refer to that as the net cost charge, the net cost charged to who? To the client. And then to this we have said we need to add any other income. In case this particular professional firm is having any other income, you come and you do what? You add that particular income there. So where do you check for incomes? You go back to the trial balance, and basically on the credit side, all incomes in the trial balance, they have a credit balance. So what you need to do, you go back to the trial balance which you're given there, and on the credit column, which is actually the last column, you check, do we have any other item of income? Up there we have the cost charged to the client, which is an income, and we have already considered that there. Below there we have on the credit side, the money held on current behalf is a liability. Creditors is a liability, and down there we have a capital. So meaning that this particular professional firm didn't have any other form of income. So what we get here are the total incomes. So to this, we proceed and we less now the expenses. Now, when deducting the expenses here, it is always advisable as a student, start with the information, start with the expenses affected by the additional information, So therefore, can we go to the additional information? In the additional information number 1, we are told, it is estimated that debt amounting to 16.5 are uncollectible and should be written off. This is the amount of money which the customers are expected, or the client of this professional firm are expected, or basically these are debts which are expected will not be paid by the client. So therefore, if debt are expected not to be recovered and therefore are to be written off, then that is a loss to this professional firm, and therefore those particular bad debts which are written off, we account, or basically we recognize them here as an expense, which is an amount of how much? 16.5. And also, other than recognizing those particular bad debts written off as an expense, when preparing the statement of financial position, we are going to reduce the receivables with the same amount. And then number 2, we are given information about depreciation. So remember, depreciation is an expense. So we have depreciation on furnitures, fittings and library books, library books, and we are told it is at the rate of 20% of the net book value. So are we given the net book value of furniture, fittings, and library books? Yes, we are given that in the trial balance as a figure of 135. So 20% of this, this should be 27,000. 27,000. Let me confirm. 20% of 135,000. 135,000. Yes, that will give us 27,000. So we have that as the other expense here. Then from there we have note number 3. Note number 3, what you're given are uncompleted work, and basically this uncompleted work, remember we have said, is the crossing work in progress. That crossing work in progress is not an expense. So therefore what we need to do, because now we have dealt with the expenses being affected by the additional information, we need to go back to the trial balance and we pick now the other expenses. All expenses, they have a debit balance in the trial balance. So when checking for expenses, you check the items in the first column. Other than the details column, the other column, which is the debit column, you check for expenses there. Up there we have work in progress at the start, which is not an expense. Down there I can see receivables, which is an asset, and then below that we have office expenses. Office expenses is an amount of 25,500, and then below that we have furniture, fittings, library book, which is an asset. We have cash at bank in current and also office account. Those are not expenses. And then from there we have postage, telephone, and internet bills. Bills, which is an amount of 54,600. And then we have printing and stationery, printing and stationery, which is an amount of 105,000. Below that we have rent and rates. Still an expense, which is an amount of 180,000. Below that we have salaries to staff. Which is an amount of 216,000. Then we have drawings, disbursement on behalf of clients, and then we have capital. So those are not expenses. So what we need to do is we get the total expenses and we deduct them from our total incomes there. So let's add all these particular expenses which we have here. We have a figure of 16,500 plus 27,000 plus 25,500 plus 54,600 plus 105,000 plus 180,000 plus 216,000. That is giving us 624,600. So we just start from the figure we have up there, which is 710,100, and that will give us a profit of 85,500. What is this? This is a profit for the year. That is the profit for the year. So in our case, we are through with what was required as far as Roman 1 of that particular question is concerned. The examiner there was requiring you prepare a statement of profit or loss. Next, let's move to Roman 2. Roman 2, we are required to prepare the statement of financial position. A statement of financial position. Statement of financial position. And we have said that this is a statement which record asset, liabilities, and what? Capital. So we just need to have a single column here. And always we start by recording non-current assets. Non-current asset. So where do we get the non-current asset? We get the non-current asset in the statement of, in the trial balance which you are provided with there. And all assets have a debit balance. All assets have a debit balance. So let's go back to the trial balance. We see which asset are we given there. And specifically non-current asset. I think first of all, we have furniture, fittings, and library books. Furniture, fittings, and library books. Library books. So the value for that is given as 135,000. But equally, what we need to remember is that there was depreciation relating to those assets, to those furniture, fittings, and library books during the current year of 27. That automatically need to be deducted from what? From this figure here, so that we get the net book value at the end of there. So this will be 135 minus 27. That will give us 108,000. Yes. So I think that's what we have, the first non-current asset which we have. Which other non-current asset do we have in our case here? Yes, we don't have any other non-current assets. Next, we record current assets. We record current asset. For current asset, let's start with the information which we have in the additional information. In the additional information, number one, we have budgets which are to be written off. We said this budget written off are recognized there as an expense, and two, we reduce the amount of receivables with that amount of money, or with those particular debts which have been written off. So therefore, what we do, we take the receivables. The receivables is the money which is expected to be received from the clients, minus now the amount which was written off, which was 16 what? 16.5. We are going to compute that. But let first of all we see the other asset which we have. We have dealt with the additional information number 2, and then the additional information number 3. We have the closing work in progress. Closing work in progress, we have said, is a current asset, which is 7,500. Okay, so we don't have any other item in the additional information. Let's go back to the trial balance, and equally I've said all assets have a debit balance. So which items of current asset do we have in the trial balance? Up there we have work in progress at the start. What we record here as a current asset is a closing work in progress. Down there you can see we have receivables, and I think we have dealt with that receivables. We have already recorded the receivables here. And then from there we have cash at bank. Cash at bank in the client account, client account, and also office account. Office account. Both of them are recorded here as assets, 74,400. And then we have a figure there of 167. 167,100, and then there below that we have postage, telephone, those are expense, printing, rent, staff salary, all those are expenses. Then down there we have drawings, which is not an asset, and finally we have disbursement on current behalf. Disbursement on current who? On current behalf. Remember, you said that this is a payment made on behalf of the client, but basically the professional firm expect to recover the same from the client. So what we need to do here is we get the total assets, the total asset. So let's get the total asset, but before you do that, there is a figure we need to compute up here. The net amount of receivables, 234,000 minus 16,500. So that will give us the 217,500. So we add all this. So we have 108,000 plus the 7,500 plus the 74,400 plus the 167,100 plus the 36,000. That will give us 673. 500, 673, 500. So those are our total asset. We double line third, and then from there we proceed, we record what? A capital. So let's proceed and we record capital. So capital is given as the last item in the trial balance. And the capital at the start of there was what? Was 612. So to this we have said we need to add this profit for the year. Profit for the year we add it here, which is an amount of 85,500. And then to this we have said also we less drawings. We less drawings, and we have drawings in the trial balance down there, which is the third item from the bottom of the trial balance, which is a figure of what? 180,000. So whatever you get here is the net capital. The net capital, this is the capital at the end of the year. So let's compute that figure there, the net capital. So we have 612,000 plus 85,500 minus 180,000, which will give us 517,500. Then finally we need to record now the liabilities. We record the liabilities. The liabilities, starting with the non-current liabilities. Non-current liabilities. Remember, in this case, we say that non-current liabilities, or this professional firm, the only form of non-current liability they may be having something like a bank loan. If you check on this particular question here, we don't have any information about what? The bank loan. And finally, we record the current liabilities. The current liabilities. So for current liabilities, in the additional information, we don't have any current liability in the additional information, but in the trial balance, all liabilities, they have a credit balance. In the trial balance, I think we have a money held on client behalf. Money held on client behalf. So the money which is held on behalf of the client is 74,400. And then we also have now the creditors. The creditors, the money which is owed to the suppliers, which is 81,600. So those are the only two current liabilities which we have. And then what we need to do here is we get the total. We get the total capital and what? And liabilities. Total capital and liabilities. So how do we get that total capital and liabilities? We take this net capital plus these liabilities here. So we have a figure of 517,500 plus 74,400 plus 81,600. Yes, that will give us 673,500. 673,500. And actually we have said this should be the same with the total asset. Is that the case? Yes. That is the same with the total what? The total asset there. That is it. That basically how we prepare the financial statement of professional firms. Make sure you attempt those two questions which I've given as an assignment. May 2015 question 2C, November 2018 question 5 what? 5B. So we stop at that point. See you in our next lesson as we look on the other subtopic.